What's up, traders? Has Robinhood stock hood made a bottom? I'm going to answer that question with a trading setup and my opinion for why I think it's a good setup. But first, because I think maybe some of the people that be watching this video are looking for an excuse to continue bag holding this, we're going to have a lecture about risk management, which is going to come into play when we talk about how and why this current setup might be a good one. Let's look at this chart. I talked about this in my live stream this last week. This is a psychological profile using Robinhood as an example of why you never say that a stock can't go lower. Robinhood has been a disaster to those that have held it, whether they're amateurs, retail traders, or even our goddess Kathy Wood with her ARC fund. It's just not gone very well. And every time people have bought, it's just continued going lower and lower and lower. Well, there was a little instance here back in October of 2021 where the stock made a little brief shoot to the upside. I like these setups right here, where right here in the opening hour of October the 21st, 2021, price shot up, got a bunch of people thinking that this was going to be a rally, but then closed back inside of this consolidation. Now, whenever price does something like this, this is a false breakout. And that's why I have this indicator here to show me when these things happen. Now, if you were a disciplined trader, if you saw this happen, this would be a sign of a potential reversal to the short side. If you were long, probably want to get out. If you wanted to get short, you could buy some puts. You could maybe short the stock if you're feeling really brave, but you needed to react based on the signal. And sure enough, with earnings coming up, how low can it go? Well, it can go a lot lower. You need to remember this anytime you are in a losing position and you're a trader. Now, I'm not talking about investors, but let's be real. Be honest with yourself. If you bought something hoping that it was going to go up 2, 3, 4x within the year, you're a trader. Don't get married to a stock. Don't get married to a position. There's no reason why you should sit here and lose another 16 double digit percent. Of course, people could still then be saying, how much lower can it go? And they're going to be saying that for many, many days. It doesn't take that much once a trend gets going, a bearish trend gets going, to really start hurting some folks. So from that point we were just evaluating here, we're down almost half, 50%. Half the capital that was invested in this is gone. I saw a meme today that was hilarious. If you put your money in a savings account, you're losing 6% to inflation every year, says the person that lost 45% day trading. You would have been better off with your money in a savings account than in Robinhood by ignoring the break of that range back there. But now we have an interesting setup to the upside. Remember, this one right here, that went down. Now we have a similar spike to the bottom, close back within the range. What this does is it lets you set up a trade, a long trade here. But if we're traders, we need to be honest and we need to trade with stops. Now, if you're okay with mental stops, put in a mental stop and get out. And at that point, even on this little wick right here, I think a lot of people, they get stopped out on a bar like this. So the trade was back on the 17th of December at around $18.49. And then maybe they got stopped out if they were disciplined down here on the 29th of December. And then sometimes when you get stopped out, price does tend to recover. And you'll think to yourself, oh, I should have left this on at, and I could have gotten out at break even, or maybe even comes back. Oh, those lizard people, those hedge funds, they took my money, they hunted my stop. You're playing games with your head, coming up with all these stories. The reality is that most of the time, when you get stopped out, it's for a reason. If it was going to reverse, it should have gone. And so the disciplined trader that only would have taken perhaps a 8% loss here, well, they're out. They've got their capital waiting on the sidelines for the next opportunity. The person that decided, oh well, it's at $18. How much lower can it go? Well, from that, they just said they've now lost another 35%. Again, would have been better off having your money in savings account. So now we're coming up to the current day. We have another one of these spike down setups. And now it's a little late to talk about it, I suppose, because it already came back down to this level right here, basically the $11.78, let's call it. It's setting up a potential trade that could be a bottom. Now, here's why I like this. Again, just like in this setup right here, if we were disciplined, we would have had our stop right there and we would have been okay. As long as you don't bag hold this kind of stuff, it's worth an opportunity. It's worth the probability, as depressed as the stock is, as beaten down as it is, because you got a couple of things happening here. What this earnings dip did was it defined basically where the next leg of a potential downside move would be. As long as it doesn't break that earnings low, this could be a very good point of reversal, just from a technical standpoint. Potential double bottom, all that good stuff. But also, what I really like is this: where it bounced was right on the $10 mark. Why is that significant? $10 is the line in the sand to what makes it a penny stock. Once it gets down into penny stock territory, I'm not sure if Hood's listed in very many indexes, but it loses its ability to be in there. Oftentimes, products will get delisted if they become penny stocks from the major indices. A lot of mutual funds, a lot of hedge funds have in their bylaws that they can't hold penny stocks. And so it no longer becomes investment grade. So if it breaks that 10, it has a good chance of going lower as these hedge funds and institutions dump it. But as long as it holds, that could be the potential bottom. So you know where the trade is wrong. It can go lower. It could still go 50% from here. But this is where your risk would need to be, breaking the low of earnings. You take the risk that it's going to gap, perhaps in some after hours price action, but you're trying to pick up a stock that everybody thinks is just absolute garbage right now. And that's what you really want if you're bottom picking. Now, everybody that's been bag holding from these years, now it's been turned into a meme for what not to do. And you have a risk defined setup with your stop below the earnings low to potentially go up higher. So that's what I think is going on right now in Robinhood. I wanted to talk about it because these opportunities come around every once in a while. Not only is it a trading opportunity, but it's a great teachable moment for people that are holding some bags and also really looking to scoop something up that's been really depressed. So trade wisely. We'll see you in the next video.